Hello friends, today is my 36th presentation for the team of Finance and Accounts, and the topic is 78 causes that can adversely impact the financial reporting of intangible assets in the balance sheet. Overall, this is my 67th presentation considering all the YouTube presentations that I have made for so far. What I plan to include in this presentation are a summary of the 10 different types of intangible assets, and number 2, narration of the operational and ethical related causes that can adversely impact the financial reporting of the intangible fixed assets such as goodwill, brand value, trademark, software, copyrights, IPRS, models, designs, licenses, and franchise. This table gives an overview of the number of causes, operational and ethical, with respect to each type of intangible assets. Like goodwill, 5 operational causes, 3 ethical causes. Brand value, 5 operational causes, 3 ethical causes. Trademarks, 5 operational causes, 3 ethical causes, and so on and so forth. For example, uh, licenses, 5 operational causes, 2 ethical causes. Franchise, 5 operational and 2 ethical causes. Overall, 78 causes that can adversely impact the reporting of intangible assets in the balance sheets. Starting with number 1, goodwill. A simple definition of the goodwill is that it is the difference between the purchase price paid for an acquired company and the fair value of its identifiable net assets, that is, assets minus liabilities. This includes elements such as brand reputation, customer relationships, employee relations, intellectual property, synergies expected from this acquisition. Goodwill is not amortized but must be tested regularly for impairment loss. Operational causes. Number 1, inaccurate fair value assessment of goodwill at the time of acquisition. Number 2, non-reporting or inaccurate reporting of the impairment loss related to the goodwill tested at least on once in a year basis. Third, inadequate disclosures related to the methods of assumptions used in the impairment testing of the goodwill. Number 4, inconsistency in the goodwill value measurement method. And number 5, not recognizing the impairment losses in case the carrying amount of goodwill in the balance sheet exceeds its recoverable value. Coming to the ethical causes, there are 3 unethical causes: non-transparency or dishonesty in reporting of the valuation and impairment methods of goodwill, manipulation impairment losses of the goodwill, and non-compliance with applicable accounting standards related to the goodwill. Number 2, brand value related causes. Simple definition of the brand value is that it represents the economic value of a brand name. It represents the legally protectable name, logo, or symbols associated with the acquired company's product or services. Operational causes. Valuation at acquisition. Unfair valuation of the brand name at the acquisition date and inaccuracy in valuation methods such as income approach or market approach. Non-reporting or inaccurate reporting of the impairment loss tested at least once in a year for brand name, and inadequate disclosures related to the methods and assumptions used in the impairment testing of the brand name. Fourth, inconsistency in the brand value measurement method and changes in the brand value not reflected. Failing to adjust the amortization schedule for the significant changes in the brand value, positive or negative, can result in inaccurate portrayal of the asset. This asset. Ethical causes. Basically, 3 similar causes which were there for the goodwill and hence not repeating. Trademarks related causes. Trademarks represent legally protected names, symbols, logos, or designs used to identify and distinguish a company's product or service. Trademarks are recognized on the balance sheet when acquired through a business combination or purchase. Internally developed trademarks are generally not recognized as intangible assets. Operational causes. Uh, Valuation at acquisition. Accurate valuation methods of trademarks must be used to determine the fair value of the acquired trademarks. Errors in the valuation can lead to misstated assets value. Incorrect estimate of the trademarks can distort the financial results. Point 3. Regular and accurate impairment testing of the trademarks is crucial to reflect the recoverable amount, and any irregularity in this process can lead to an overstatement of the asset value. Continuing with the operational causes, an inappropriate method can lead to inaccurate financial reporting of the trademarks, and non-comprehensive or inaccurate disclosures about the valuation methods, useful lives, amortization policies, and impairment test of trademark can mislead the stakeholders. Ethical causes, similar to the one I explained about the goodwill and the brand value. Software. Software, when recognized as an intangible asset, represents the proprietary programs, systems, or applicable developed or acquired for use in the company's operations. Operational causes, cost capitalization. Incorrect capitalization of software can lead to misstated assets value or financial results. Underestimating of the or overestimating the useful life of the software can destroy the financial performance. Inaccurate and non-regular impairment testing of the software can adversely impact the carrying value of the recoverable amount. An inappropriate method to reflect the how software's economic benefits are consumed can lead to inaccurate financial reporting. Inadequate or incomplete or inaccurate disclosures with respect to software can mislead the stakeholders. Ethical causes, non-transparency or dishonest reporting of the valuation of the software and impairment, non-compliance with the software reporting standards, and delaying in or avoiding impairment recognition of the software causing compromising of the stakeholders' interest. Copyrights. Copyrights, when recognized as intangible assets, represent the exclusive legal rights granted to the creators or of original work, including literary, dramatic, musical, and artistic works. Incorrect capitalization of the operational causes. Incorrect capitalization of the copyrights can lead to misstated asset value and financial results. Understating or overstating the useful life of the copyrights can distort financial performance. Not identifying the impairment losses or inaccuracy leading to overstated assets value of the copyrights. An inappropriate method can lead to inaccurate an inappropriate method for amortization can lead to inaccurate financial reporting of the copyrights. Non-comprehensive disclosures about the cost capitalization, useful life, and amortization policies can lead to adverse impact on the copyright value. Ethical causes. Again, similar three ethical causes related to the transparency and honesty in reporting, non-compliance to the standards, and delaying or avoiding impairment recognition of the copyrights deliberately. IPRS related. IPRS intellectual property rights. They encompass patents, trademarks, copyrights, trade secrets, and other similar rights. They provide exclusive rights that generate economic benefit. Operational causes. Incorrect capitalization of the IPRS can lead to misstated assets value and financial results. Similarly, understating or overstating the useful life of the IPRS can distort financial performance. Not identifying the impairment losses or inaccuracy can lead to overstating assets value of the IPRS. An inappropriate method for amortization can lead to inaccurate financial reporting of IPRS. And non-comprehensive disclosures about the cost capitalization, useful lives, and amortization policies of leading to adverse impact on the IPRS value. Ethical causes, three clauses uh, similar similar to the copyrights or other earlier intangible assets. Models. In the context of intangible assets, models can refer to financial, business, software, or other proprietary models that provide competitive advantage and economic benefits to the company. Here also, operational causes 5. Incorrect capitalization of models can lead to misstated assets value and financial results. Number 2, useful life estimation. Understating or overestimating the useful life of the models can distort financial performance. Not identifying the impairment losses or inaccuracy leading to overstated assets value of these models. Inappropriate choice of method can lead to inaccurate financial reporting of models. Non-comprehensive disclosure about the cost capitalization and useful lives and amortization policies can lead to adverse impact on the model value. Ethical causes are similar. 3. Transparency and honesty related, compliance with the accounting standards, and delaying or avoiding impairment recognition of the models. D- Type 8, design rated. When recognized as intangible asset, designs refer to the unique patterns, configurations, or forms used in product manufacturing or patenting. These designs can be protected by design patents or other legal rights, providing economical benefits throughout exclusively. Incorrect capitalization of the designs can lead to misstated assets value and financial results. Understating or overstating the useful life of the design can distort the financial performance. Not identifying the impairment losses or inaccuracies leading to overstated assets value of the designs. Continuing, point number 4, operational costs. An inappropriate method can lead to inaccurate financial reporting of designs. Non-comprehensive disclosures about the cost of compensation, useful lives, and amortization policies leading to adverse impact on the designs. Ethical causes, again 3, transparency and honesty, compliance with accounting standards, and impairment recognition delaying. License related. A license is an intangible assets on the balance sheet that refers to the value attributed to the company's acquired rights to use intellectual property, software, trademarks, patents, or other proprietary technology from another entity. These licenses allow the licenses to legally use the licenses property for a specific period under certain conditions in exchange for the payment of royalties. Ignoring operational causes. Ignoring real cost. Failing to consider the potential cost of renewing the licenses can lead to an overstated assets as the true lifespan is not reflected. Number 2, inaccurate usefulness estimates. Overestimating the future economic benefit from this license, for example, due to changing technology or market conditions, can lead to an overstated assets. 3. Lack of expertise. Using unqualified professionals for license valuation, especially regarding future benefits, can lead to inaccurate assessments. Fourth, incorrect amortization. Using an amortization period that exceeds the actual license term can lead to an overvalued assets on the balance sheet. Not reflecting changes in the value, failing to adjust the amortization for the significant changes in the underlying assets value or the license relevance can lead to inaccurate portrayal of this value. Ethics related. International license inflation. Companies might inflate the value of an acquired license to create a large future amortization expense. Capitalization, excessive cost. Capitalization, any cost remotely related to the obtaining a license can lead to overstated assets. Lastly, franchise related. A franchise is an intangible asset on the balance sheet that refers to the value attributed to a company's acquired rights to operate under a franchisor's brand name and business model. These rights include using the franchise trademark, proprietary knowledge, and business practices, usually in exchange for an initial fee and ongoing royalties. Operational causes. 5. 1. Impairment of assets value. Overestimating the franchise useful life or future economic benefit can lead to inflated assets value, which may require later adjustments and impairment impacting financial statements. Incorrect valuation methods. Using inappropriate or inconsistent valuation method for franchise, such as not following standard accounting practices, can result in inaccurate assets value, affecting the reliability of financial reports. Amortization errors. Miscalculating the franchisee's amortization period or rates can lead to either overstating or understating expenses, impacting net income and assets valuation on the balance sheet. Continuing, fourth cause, operational cause. Poor or incomplete documentation supporting the valuation and ownership of the franchise can lead to challenges in the verifying the assets value and non-compliance with the accounting standards. Ethical causes. Intellectual property infringement. Using franchise that infringes on the others' intellectual property rights can lead to legal disputes, fines, and reputational damage. Deliberately inflating the value of the franchise to present a stronger financial position can then reality is unethical and can mislead the investors and stakeholders and regulators. So this is the overall summary for the 10 intangible assets I talked about, narrating listing of 78 causes that can adversely impact the financial reporting in the balance sheet. Future references. Building on Profitability and Ethics was my second book, which was released in November 23, and this blog focuses on the 10 different types of intangible assets. My forthcoming book, third book, will dive deeper into the smart balance sheet strategies and ethical practices that can unlock profitability. You can also refer to some of the articles of your interest on my website. Address is given below, and the Facebook and the LinkedIn. Thank you very much.